You're listening to ChartingWealth.com for Thursday, the 28th of May, 2015. Look at what the market was up to today. This is the total market. This is IYY. You can see from the candle today, we have a doji. What does that doji tell us? Well, a doji is that little bitty green cross you see there. It means that the market was pushed up and down and down and up, and the market ended. And if we revert to our 4-hour chart, you can get a better idea of the seesaw that occurred. You can see what all has occurred now. In fact, that was the 2-day chart. So these four candles on the 4-hour chart represent 2 days, and you can see what's happened. The market was pushed up to here, was pushed down to here, and it settled right about in the middle. What does that mean on a big chart? Well, it means indecision. Now we look at the small chart, which is this 4-hour chart. What do we see? Well, we see that the market over the 26th was pushed down significantly, and that today it was pushed up, and it settled about halfway in between. It is still technically on the 4-hour chart in a down position because we had a crossover on the MACD at 4 p.m. Well, actually the morning of the 26th going down. Derivative oscillator is still down. The MACD is down. But if we go to the 2-day chart, you can actually see that we are still in an up position on the large chart's MACD. It crossed over going up on the 14th, and the derivative oscillator is up. That's the light green square you see behind, and superimposed over that is the MACD, which is in an up move, although we are seeing a great deal of indecision. We had a crossover on our 2-day trend line, but we are in what I would call a very indecisive mood right now. Now, we have had a strong run-up over the days prior to the 4-day down move. We had 8 or roughly 10 days of up movement. What is the market doing? Well, it is settling out, digesting something, and we'll have to continue to watch where it goes. Market has been in a big up move, but as we keep talking about, we are in May. That old adage that I say every day, sell in May and go away, still comes into play. What does that mean? It means that the big money leaves the market, a lot of volume leaves, the market gets choppy and weird. That is why a lot of people get out of the market in the summertime and let it go to the amateurs, let it go to the younger people that are running things with many of the big money managers are stepping aside, maybe taking some much needed vacation, and other things are happening. But we need to pay attention to what's going on now. Let's go from the total market to SPY. What do we see here? Well, we get a little bit better of a view. Not quite as much indecision, not as much of a doji we have here. And again, you can see the up movement totally contracts down, the down movement moves up, and we've got a short range over the 2-day period on the chart for the 27th. You can see the charts prior to that, some significant down movement. But again, the down movement, as far as the candles go, never went below the up movement on the 2-day chart on the 20th. What's that telling us? Well, it wasn't such a substantial down movement. In fact, it wasn't enough to have the MACD crossover going down, nor even the derivative oscillator crossover going down. What's happened today with the up movement from the close yesterday? Again, that's totally contained within yesterday's, when I say yesterday, the 2-day prior candle on the 26th and before. It is totally contained within the movement that you see on the current 2-day candle. Now, let's revert back to the 4-hour chart and see what that tells us. Well, you can see a substantial up move today, crossover going down on the 4-hour chart back on the 26th. Significant up movement today, actually crossing through the 2-day down trend line when it closed. No crossover, however, on the MACD for today, nor a positive on the derivative oscillator. A little bit of loss in that momentum and some converging on the MACD. But again, We don't trade on the short chart when we can trade on a long chart. And the long chart tells us that we're still in an up move both on the total market and on the SPY. Now, let's go from that to the Qs. The Qs was up today. Oh, and technically, we go back to the SPY. It was up 0.95%. That's almost 1%. IYY up 0.92%. Again, almost a percent. The Qs was up 1.61%. It is continuing to move up. In fact, there was a divergence, which means a wider spread in the MACD that crossed over going up back between the 14th and the 18th. And we've seen continued up movement on the 2-day chart. Derivative oscillator got bigger, it grew, and the MACD widened. So we continue to have up movement on the Qs, much more than we see on the total market, than we see on the S&P 500. Now let's take a closer look and go to the 4-hour chart, and you can see significant up movement this morning and greater up movement yesterday than it even closed, than even the highest before on the down move. So a significant up move today, and you can tell even the 4-hour chart is just about to cross over going up. Derivative oscillator bled off a lot of its energy. So the Qs is continuing its up move. A little more questionable about where things are going, particularly in the broad market, the total market, and a little less in the S&P 500. But technically, all three of these charts are in up moves on the big 2-day MACD, the moving average convergence divergence. Okay, so that's where we stand. Now let's go back to the 2-day chart and let's look at gold. What is gold doing? Well, gold has crossed over, going down for the first time, look at this, since the 25th of March. It has gone up until about the 8th or so, that is of April. Then it started sliding sideways and going down. Then it took off shooting up on the 14th. Around that time period on the 2-day chart, that is the 14th of May. And then it sort of reached its highest high on the 18th, and then it has moved down since then. Technically, over the last 2 days, crossed over, going down on the MACD. And again, this sliding sideways is always difficult with the MACD. Those of you who have been following my dissertations on the market over the last several weeks, you remember me talking about the sliding sideways that, of course, makes it difficult to use the MACD. However, the MACD has now converted over going down. Derivative oscillators almost lost all of its steam and looks like it's getting close to reverting over into the negative. Let's take a look, shall we, at the 4-hour chart. And of course you can see the significant down movement. 4-hour chart crossed over on gold going down back between the 19th and the 20th. And actually the morning of the 20th, morning of the 20th, crossed over going down. And with the significant down moves over the last 2 days, of course the 2-day chart now does reflect gold in a down move. So that's where we are. The three indexes, total market, S&P 500, and particularly the Qs in up moves, gold in a confirmed down move, crossing over, going down on the 2-day chart. So first time we've seen that in quite a while. So those are the positions. That's where we see things at the close of the day on Wednesday going into Thursday the 28th. Wish you the best in trading. We always like to hear your comments, questions, concerns. You can email us at Charting Wealth. Go to the website chartingwealth.com. cw@chartingwealth.com is our email address. We always love your postings on Facebook and Twitter. Please follow us both those places. And we're here to help. God bless you. Great trading, wonderful investing we wish to all of you.